Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today we're going to be looking at receivables, also known as accounts receivable. As we do in each one of these fundamental analysis tutorial videos, I'll give you the actual definition, and then we'll go on to look at some examples and give you more insight. Receivables represent money that is owed to a company by its customers in exchange for goods or services that have been delivered or used but not yet paid for. In this example, we'll be looking at accounts receivables on the actual cash flow statement, and for this example, we'll be using the Walmart Stores Incorporated cash flow statement. As we'll start there. You'll notice we've already talked about the depreciation figure here as well as the net income figure here. Accounts receivable, this little figure right here, is simply the difference between the accounts receivable data found on the balance sheet. So let's quickly go there right quick. All right, here we are on the balance sheet. You can see that if you scroll on down here to receivables, you can see this period is $5.9 billion versus the previous period of $5.0 or $5.1 billion. If you simply subtract this number from this one, you will see that you have an increase between net receivables. Whenever you have an increase in net receivables, you're going to subtract that from the cash flow on the cash flow statement from the net income. And the reason for that, let me quickly go there right quick to the net income statement and get you that information. Alright, let me move this down here. On the net income statement, you'll see the total revenue. The total revenue is all the money that has been earned for the company for this particular period of time, and over that particular period of time, 12 months in this case. And some of that revenue has been earned via there was actual cash that came in the door, and some of the cases it was credit, basically accounts receivable. So what we want to do on the cash flow statement is analyze that data and figure out exactly how much of the net income is real cash. And so let's go back here to the cash flow statement. We can see that on the cash flow statement here, we've got the net income figure, and then we're going to simply subtract any accounts receivables that we've increased in accounts receivables. That means that people have purchased from us, but they've done so on credit. So we need to remove that from the net income figure. So that's why when accounts receivables increases, we subtract it. Now, if accounts receivables were to decrease from one period to the next on the balance sheet, let me quickly go back there. On the balance sheet, if you were to see the net receivables figure to actually be lower on this period than it was on this one, then you would know that the company actually had turned some of those net receivables into cash. They had the customers had paid for them, and that's why it was down. And so we want to add that to the cash flow statement add that to the net income figure on the cash flow statement. So whenever you see the one time it may be negative, another time it may be positive, you'll know what's going on there. In this particular case, you can see that it has been negative for the past 3 years here on the cash flow statement on Walmart Stores Incorporated. Therefore, you know they have been increasing their net receivables from one period to the next, to the next, to the next. And every time that happens, you're going to subtract that figure from the net income figure because you're trying to figure out just the cash flow, not the actual credit and all the total sales, but just cash flow. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.